Welcome back to Retirement Roadmap, where we help you navigate the twists and turns of saving for a secure financial future. Today, we're tackling a question that's likely on the minds of many of our viewers. Will this week's numbers push you over $1 million in retirement savings? If you've been following along with our show, you know that achieving this milestone is no easy feat. To put it into perspective, let's take a look at Sarah and Mike, a couple who started saving for retirement in their late 20s. They contributed aggressively to their employer-matched 401k plan, taking advantage of the maximum allowed catch-up contributions as they approached age 50. Fast forward a decade later, and their combined balance had reached an astonishing $950,000. But here's the thing, this week, Sarah and Mike are facing some unexpected windfalls. They've inherited a small estate from a distant relative, and Mike has been offered a significant bonus at work. These extra dollars will give them an opportunity to max out their Roth IRA contributions for the year, as well as boost their monthly retirement savings by thousands of dollars. As we explore this scenario with Sarah and Mike, you'll see just how much these added funds can accelerate their progress towards $1 million. We'll break down the numbers, examine their investment strategy, and discuss the implications of their newfound wealth on their overall financial plan. Will they finally cross that elusive seven-figure threshold? Stay tuned to find out. As we continue on our journey to retirement security, one question has been at the forefront of many viewers' minds. Will this week's numbers be enough to push you over that coveted $1 million milestone in your retirement savings? For some, the prospect of breaking through this psychological barrier is a major motivator. It represents not only a significant achievement but also a tangible measure of progress towards financial freedom. Let's take a step back and look at some context. As we've discussed previously, reaching a retirement savings goal of $1 million requires a combination of time, discipline, and smart investing strategies. The exact amount you need will depend on various factors, including your desired lifestyle, expenses, and life expectancy. However, for many people, $1 million is a benchmark that represents a comfortable nest egg. To give you a better idea of just how far you've come, let's consider some hypothetical numbers. If we assume an annual return of 7% on your investments, a reasonable estimate given the current market conditions, and an initial principal balance of $200,000, we can calculate that it would take approximately 25 years to reach $1 million. However, individual circumstances can vary significantly. Factors such as income, debt, and financial priorities will all impact your ability to save and invest. Additionally, the stock market's performance can be unpredictable, with periods of volatility that may affect your progress towards this goal. Given these complexities, it's essential to have a clear understanding of your own financial situation and create a customized plan tailored to your needs. By staying focused on your objectives and adapting to changing circumstances, you'll be better equipped to navigate the twists and turns of the journey towards retirement security. As we dive into the latest financial data, our attention is drawn to a significant development in our host's own retirement savings journey. Just last week, their portfolio saw an impressive growth of $23,100, bringing their total savings to a staggering $934,820. This remarkable increase has many wondering, will this week's numbers propel them over the coveted $1 million mark? To answer that question, we'll need to examine several key indicators and market trends. Let's start with the quarterly earnings reports from our host's top-performing stocks. As of this morning, tech giant Apple Incorporated has reported a 12% increase in revenue year over year, while Amazon.com continues to defy expectations with a remarkable 22% growth rate. Meanwhile, on the bond front, Treasury yields have experienced a slight dip, creating an attractive investment environment for fixed-income securities. This development is particularly beneficial for our host's diversified portfolio, which currently allocates approximately 30% of its assets to high-grade corporate bonds. In terms of market performance, major indices such as the S&P 500 and Nasdaq Composite are trading near historic highs, reflecting a generally bullish sentiment among investors. Our host's diversified stock holdings have historically benefited from these trends, contributing to their impressive returns over the past year. Now, let's crunch some numbers and apply our proprietary retirement savings model to estimate the likelihood of reaching $1 million by week's end. Assuming an average daily growth rate of 0.75%, consistent with recent market trends, and factoring in the current asset allocation, we can project a possible outcome for this week's performance. As we delve deeper into the analysis, it's essential to consider the real-world implications of reaching a $1 million milestone in retirement savings. Let's take a look at the scenario presented by John and Sarah, two investors who have been diligently contributing to their retirement accounts for over a decade. Their current balance stands at approximately $950,000, with a modestly sized portfolio generating around 4% annual returns. Given this trajectory, they're likely to surpass the $1 million mark within the next quarter. But what does this achievement truly mean in practical terms? From an investment perspective, reaching $1 million can provide several benefits. For one, it allows for greater diversification and reduced risk exposure, as a larger portfolio can weather market fluctuations more effectively. Furthermore, it enables investors to tap into higher-yielding investments, such as real estate or small business loans, which can potentially boost returns. However, we must also consider the tax implications of this milestone. The Tax Cuts and Jobs Act of 2017 introduced significant changes to retirement account rules, including increased contribution limits and more favorable withdrawal provisions. For John and Sarah, these changes may provide additional flexibility in managing their taxes during retirement. Moreover, reaching $1 million can also serve as a psychological benchmark, providing a sense of security and accomplishment that's difficult to quantify. Many investors report feeling more confident in their financial future after hitting this milestone, which can be a powerful motivator for continued savings discipline. As we explore the specifics of John and Sarah's situation, it's essential to examine these various factors and how they impact their long-term goals. As we dive deeper into the world of retirement savings, it's clear that making it to $1 million is no easy feat. But what if I told you that it's not just about saving more, but also about timing and strategy? Let me share an example with you. Meet Jane, a 45-year-old marketing manager who's been diligently contributing to her employer-sponsored 401k plan for over a decade. Jane has consistently contributed 10% of her income towards her retirement savings, and her company matches that amount. Over the years, she's accumulated a substantial portfolio worth $875,000. However, with each passing year, her contributions have been diminishing due to decreased salary growth and increasing expenses. It's a common phenomenon. As we age, our earning potential tends to plateau, making it more challenging to reach our savings goals. Fast forward to this week's market performance. The stock market has experienced a significant surge, pushing Jane's portfolio up by nearly 8%. While this is undoubtedly a welcome development, it also presents an interesting dilemma for Jane and others in similar situations. With her retirement account now valued at $948,000, she faces a critical decision: should she continue to contribute the same amount or adjust her strategy to optimize returns? Let's break down the numbers. Assuming Jane continues to contribute 10% of her income towards her 401k, it would take her approximately 2 years to reach the $1 million mark at the current growth rate. However, by adjusting her contributions and taking advantage of catch-up provisions in her plan, she could potentially shave off 6 months from that timeline. As we conclude our analysis of the latest market trends and their potential impact on your retirement savings, it's clear that every dollar counts. Whether you're nearing $1 million or still working towards that milestone, making informed investment decisions is crucial to achieving your long-term goals. We've examined the current numbers, and while they present both challenges and opportunities, one thing remains certain: consistency is key. Even small adjustments to your strategy can have a significant impact over time.